Hi, this is Zach May with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 23rd of January. Starting off with the FTSE 100, which is not looking that chipper at the moment. We failed below the 50 and 200-day moving averages around 75.60, and the initial support there is an August uptrend line 74.20. Below that, risks a move down towards the 71.60 area, although it's early days in terms of assuming that the 7400 area will break any time soon. RSI in the upper 30s, which still leaves the potential for at least a retest of that August line around 74.20. On the upside, an unlikely break of 75.60 and the 200-day line could take us up to the main post-June or post-May resistance really for this market through 77.50, but that seems a long way away at the moment. Moving on to the DAX, which has been in a rather better place than the FTSE for quite some time. Still trying to break that line of resistance from December. That's around 16,600 and sort of a touch and go whether it can do that. But if we can get through that, then it would be up to 17,000, which is or was the December resistance. On the downside, the 50-day line, 16,400, is the place that we're expecting any failure to end up at. Moving on to the Dow, and here it's all about record highs, which is obviously not what we're into over here in the UK. Here we've got a rising trend channel from the latter part of October, above 38,000. We're looking for 39,300 as soon as the end of next month, which is a resistance line projection from the autumn. On the downside, not expecting anything worse than 37,000 at this stage, which is basically post mid-December support for this market. If we do break that, then the next level down would be the 50-day line at 36,400. Moving on to Bitcoin, which is rather sickly at the moment, still trying to get over the excitement of the ETF move, but we've broken out of that rising trend channel. We were fearing that below 40,000 we would head back up down to initial November resistance at 38,000. That looks like the destination for this market. Worst case scenario at this stage is heading back down to 35,000 and the old November support. But I think ideally we're looking for 38,000 to save this market. On the upside, we need an end of day close back above the former support there around 40,400, which would then suggest that we can head back to the 50-day line at 43,200, but at this stage that's the best we are expecting. Moving on to gold, and here it's a matter of also trying to break that line of resistance there from December. In this case it's around 2050, so an end of day close above that required to give us a retest of the late December resistance around the 2100 level. RSI is still just about on the right side of neutral 50 at 51. And I suppose the other point to note is that we'd like to see support here come in at or above the 50-day line at 2030. Moving on to the stocks, and first off is Bison, which had an announcement today, gapped up through the 50-day line, rising 50-day line. So that does imply that if we can get through 2.2 pence, or in fact the 200-day line at 2.25, then we could be up to 2.6 pence. By the end of next month. Ideally we stay on the right side of 1.8 pence. These payment companies seem to be doing rather well at the moment, which is rather interesting. That's happening sort of across the board. Boku is one of them, and we've had a golden cross going into the latest gap higher. Rising trend channel here from March 2022, and the top of that channel currently pointing to a target as high as £2 by the end of next month if we remain above the floor of the latest gap around £1.60 on an end of day close basis. Another payment situation is coming from Cornerstone, one of the best performers of the recent past. Here, well, in the small cap area anyway, here we've got a rising trend channel from August. We were looking for the low 40s, so up to 43 pence, and not far off that now. Peak 39.5. 43 still possible while we remain above the initial January resistance at 34 pence. Crimson Tide is next, and here another company which is updated today. Here we've got a gap higher after a sideways shuffle above a rising 50-day line, which tends to be a good signal. In fact, it was also a bear trap gap reversal, gap there at the beginning of December. So above recent support for the shares around 170, looking for £2.20 as soon as the end of next month. Big moves for E-Star, which finally got the validation of a big mining company. In this case, it's BHP. Actually, one would have thought the shares would be rather higher or done even better than they have so far, but it's early days. Above neckline resistance of 1 3/4 pence. We're looking for 2.7 pence by the end of next month. We're just currently toying with the 200-day moving average, just under 2 pence, and basically that would be a break of that would be the first time since the beginning of last year. So end of day close above 2, and we're looking at 2 3/4 pence for E-Star over the next 4 to 6 weeks. We had a good run of closes from Emerson earlier in the month, and looks like the shares are regrouping again, bouncing off the late December resistance there at just under 2 pence. Above 2 pence, looking for initially up to 2.6 pence, which is the top of that triangle from August, and then up to 3.5 pence, the top of the July gap down for the shares. But at least while we're on the right side of 2 pence, looking for a decent upside there. A stock which doesn't make the grade here very often is Eleco. Here you can see that the shares have managed to gap higher through resistance, in this case through 91 pence. The longer we stay above the floor of the gap, currently around, well, the latest gap around 87, the greater the chance of a move towards the top of that rising trend channel from back in April 2022, as high as £1.15, maybe even £1.20 if I draw that upper parallel more accurately. Next up is Ethernity Net, which I know has some quite strong followers. Here we're having another go at retesting the dizzy heights that we saw back in November. We pushed through the 50-day line at 1 1/4 pence, and above that, looking for the top of that rising trend channel from back in August at 2 1/4 pence. To be hit as soon as the end of next month. Good noises and another update from Golden Metal Resources. Here we've gapped up after the golden cross that we had earlier in the month. Quite appropriate, I suppose, that is. And here we're looking for the shares to head up to, and we have been looking for the shares to head up to 12.5 or even 13 pence by the end of next month, while we remain on the right side of 10 pence. Next up is a stock which had a nice little spike earlier in the month, but it's come back quite sharply. Huddled Group. Here, the main thing is that we remain above the 50 and 200-day moving averages around 2.95 pence. If we can do that, then we can hopefully retest this month's resistance area and also last year's resistance area through 4 pence. In this case, it could be as soon as the end of next month. Some commentary on social media, on Twitter, or X as it's called now, about Shield Therapeutics. Here we've got the shares still trying to consolidate above a rising 50-day moving average at 6.5 pence. Above that, we're looking for a retest of recent resistance at 7.6 pence over the next month or so. Going on to the last two, and the first one is Serinus, and here you can see we've got a potential rising trend channel base gap off the floor of that channel around the 2.5 pence level, and while we're above 2.5 pence, looking for up to 4 pence by the end of next month. If you're cautious, you wait for an end of day close through the 50-day moving average around 2.85 pence. Finishing off with stock which has got some people on the edge of their seats, others not. Here we've got Synergia, which gapped up from a rising 50-day moving average. The levels here are breaking the 200-day line at 0.11, that's the first target, and then secondly 0.16 at the top of that broadening triangle from March last year. But the key here is remaining above that 50-day line. That's it for me today. More updates tomorrow.